Did you hear about the latest US move to tighten chip export restrictions to China? It's a bold step to protect national security.
Bold, yes, but is it wise? Cutting off China might seem like a strategic move, but the repercussions for US companies in the global semiconductor market are significant.
It's not just about economics. Allowing China access to advanced chips could mean those technologies are used in military applications or surveillance, directly countering US interests. Isn't that a risk worth mitigating?
National security is a valid concern, but these measures could backfire. China is already accelerating its domestic chip production capabilities. If they become self-reliant, US companies lose a huge market and the leverage that comes with it.
But the restrictions buy time for the US to solidify its own technological lead and strengthen alliances. Look at how the Netherlands and Japan are also limiting China's access to advanced chip-making equipment. A united front is more effective in containing the risks.
The united front isn't as stable as you think. South Korea, for example, has expressed concerns over how these policies affect their chip makers. Forcing allies to comply with US Swift demands could strain relationships in the long run.
It's not forcing, it's cooperation against a shared challenge. Besides, the CHIPS Act incentivizes domestic production, reducing dependency on adversarial markets. A strong US manufacturing base is essential for resilience.
Domestic production is important, but it doesn't solve the problem of market access. China represents 1/3 of the global semiconductor market. Losing that revenue could cripple innovation and lead to layoffs in the US tech sector.
Short-term losses are unavoidable, but they're a trade-off for long-term security. Would you rather the US face economic challenges now or deal with a militarily advanced China later?
You're assuming these restrictions will prevent China from advancing. History shows that embargoes often spur innovation. Look at how they're investing billions into their semiconductor industry. They may overcome these hurdles faster than anticipated.
That's possible, but the US still has an edge in R&D and cutting-edge technology. Restrictions slow China's progress, giving American companies time to innovate further and maintain their lead.
But at what cost? NVIDIA, Qualcomm, and Intel generate billions from China. Reduced revenues could mean less investment in R&D, harming the very innovation you're banking on.
They'll adapt. NVIDIA already developed less advanced chips for the Chinese market to comply with earlier restrictions. Companies are resilient and capable of thriving under new regulations.
Resilience has limits. If this goes on, China could exclude US firms entirely and build partnerships with other countries. The global supply chain is interconnected, and alienating China might isolate the US in the long run.
That's why diversification is key. Partnering with allies to build secure, diversified supply chains reduces reliance on any single market, including China.
Diversification sounds good on paper, but it's not immediate. Meanwhile, China is forging ahead with alternative solutions. Pushing them away only accelerates their efforts to decouple from US technology.
Decoupling is inevitable. Wouldn't it be better for the US to lead that process on its own terms rather than be forced into it later?
Leadership isn't about imposing unilateral restrictions. It's about creating frameworks that ensure mutual growth and security. This zero-sum approach risks alienating not just China, but also US allies and global partners.
I disagree. Leadership sometimes requires tough decisions. Restricting access to critical technologies safeguards US interests and ensures a more secure global landscape in the long term.
And I believe that sustainable leadership is about collaboration, not confrontation. If the US continues down this path, the unintended consequences might outweigh the intended benefits.